July 1st, 1999. The world was buzzing about the new millennium, the dot-com bubble was nearing its peak, and the euro had just been introduced. Meanwhile, in Japan, a quiet revolution was taking place. A revolution that would change the landscape of global finance in ways no one could have predicted. This revolution was led by ordinary housewives trading currencies from their homes across the country, a group known as Mrs. Watanabe. Armed with nothing more than personal computers and an unyielding resolve, Mrs. Watanabe shook the global financial markets from their kitchen tables forever. To understand this phenomenon, we need to go back to the late 1980s. Japan's economy was booming, second only to the colossal United States. This strength was especially apparent in real estate and the stock market, where prices were sky high. However, what goes up must come down. As the 1990s rolled in, Japan's economic bubble burst, causing real estate and stock markets to collapse and wiping out trillions of yen in wealth almost overnight. The economic powerhouse was brought to its knees, marking the start of Japan's lost decade. In an effort to revive the economy, the Bank of Japan decided to lower interest rates. When interest rates are high, borrowing money is expensive, so people and businesses prefer to save. Conversely, when interest rates are low, borrowing is cheaper, encouraging spending and economic stimulation. Despite these low interest rates, the Japanese economy continued to struggle, and regular people weren't seeing much return on their savings. During these tough times, something unexpected started to happen in Tokyo. A surprising force was rising, not in the fancy offices full of businessmen, but in the homes of ordinary people. This force was Mrs. Watanabe. Who exactly is Mrs. Watanabe? She doesn't exist as a single person. In Japan, Mrs. Watanabe is akin to John Doe, or Average Joe in English. It's a common surname used to represent an everyday person, in this case, the average Japanese housewife. Women in Japan often manage household finances, so they notice the low growth of their savings in Japanese banks. Seeking better options, they turned to foreign exchange, forex trading, where they could trade different currencies and potentially make a profit. Over 1 million of these women began speculating in financial markets, leading to the emergence of the Mrs. Watanabe movement. Imagine being a Japanese housewife in charge of household finances, looking to invest money but finding no attractive options at home due to low interest rates. This was Mrs. Watanabe's reality. Her savings were growing too slowly in Japan's banks, so she decided to try something innovative. She thought, why not borrow money here in Japan where it's cheap, then lend it out in a country where I can get higher interest? This idea is known as the carry trade. In a carry trade, one borrows money in a currency with a low interest rate, like the yen, and invests it in a different currency with a higher interest rate, like the Australian dollar, pocketing the difference. The carry trade allowed Mrs. Watanabe to earn more by taking advantage of interest rate differentials. Just like that, Mrs. Watanabe found herself at the center of a financial revolution, right from her kitchen table. The birth of the Mrs. Watanabe carry trade phenomenon marked a savvy financial maneuver that soon attracted global attention. This wasn't just a few people. The word spread, and thousands of Mrs. Watanabe across Japan were doing the same thing. The carry trade was the hottest ticket in town, and it seemed like the good times would never end. However, there is no such thing as zero-risk profits. In 1998, the Russian financial crisis hit the global financial market. Russia defaulted on its debts, creating a massive shockwave in the global financial system. The carry trade's downside became evident. If the yen's value rose against the currency Mrs. Watanabe had invested in, repaying the borrowed yen would lead to losses. This is precisely what happened. Investors, scared by the crisis, rushed to pull their money out of risky investments and put it in safer places like the yen. As more people bought yen, its value increased, turning a winning strategy into a costly one. The Russian financial crisis was a wake-up call for Mrs. Watanabe and other carry traders, reminding them that their business was not risk-free. In the aftermath, Japan's economy continued to struggle. Even with a zero-interest rate policy introduced in April 1999, the country faced deflation, a situation where prices decrease, discouraging spending. To combat this, the Bank of Japan took a bold step in 2001 by introducing quantitative easing, QE, a policy later adopted worldwide during the 2008 financial crisis and the COVID-19 pandemic. QE involves creating new money to buy government bonds, flooding the economy with money, lowering interest rates further, and encouraging borrowing and spending. For Mrs. Watanabe, QE was a double-edged sword. On one hand, it meant higher potential profits from the carry trade due to even lower interest rates. On the other hand, the risks were still fresh in her mind. Despite this, the Mrs. Watanabe phenomenon continued to grow. By 2005, a significant number of Japanese housewives had ventured into online currency trading. The typical Mrs. Watanabe was in her mid-30s,